Welcome. We're so excited that you're here with us today. My name is Rachel McIntosh, and I am a cryptocurrency journalist and podcast host at Finance Magnates. And I'm also going to be chatting today with two amazing thought leaders from the DeFi world. We have with us Jason Blick, who's the CEO of Eckybank, and Brad Yassar, who's the CEO of Equify. And I'm going to let both of these guys introduce themselves a little bit more thoroughly in just a moment. But before we get to that, a few housekeeping matters, about this webinar in particular. So our discussion today is going to last about 45 minutes. And after that point, the floor is going to be open for questions. So if you have any comments or questions that you'd like to share with us today, please feel free to do so at any point during this webinar. We'll do our very best to get to them at the end. If we don't get to your questions today, we'll do our best to follow up with you after this webinar has been finished. Also, just for your information, this webinar will be available on demand after today's live session. So if you miss anything, no worries, we've got you covered. It's going to be available on YouTube, and we'll send out the recording after this is over. We'll also send some information about other webinars that are upcoming in the future. Last but not least, we'd love for you to share this webinar on your social media networks. So make sure that you click that share button. Sharing is caring, of course. Without any further ado, let's get this conversation rolling. So Brad and Jason, welcome. I'm going to have you both introduce yourselves a little bit more thoroughly than I just did, starting with Jason.
Thanks, Rachel. It's a pleasure to be here. My name is Jason Blick. I'm the CEO and founder of Ekibank. We were one of the first digital banks in the world. We established in 2015. We provide banking services to 180 countries around the world, and we're very crypto friendly.
Wonderful. I think there's probably a lot of people in the audience who are happy to hear that. Thank you, Jason. And Brad, tell us about yourself.
Thank you for having us, Rachel. I'm Brad Yassar, and I'm the CEO of Equify, a DeFi platform powered by a licensed and regulated bank, Ekybank, that is bridging the gap between DeFi and digital banking.
Wonderful. Thank you both for being here today. And I understand that you both were just at the Miami Bitcoin conference. So just briefly, can you talk a little bit about what that was like, what the industry morale was after this crazy 18 months that we've just gotten through?
Yeah, Miami was very interesting. There was such an appetite for an offline in-person gathering that we saw a lot of friends, old and new, and the interest in our space was tangible. I mean, you could walk the streets of Miami without being, involved with any project or vicinity of any project, and still hear people talk about the events or crypto, NFTs, DeFi, and yeah, it was a really great atmosphere to be in.
Absolutely. And Jason, I think before we started, you were saying that some tickets were going for, I think, $25,000 the day before the conference started. Is that true?
Well, apparently there were 50,000 people that went down to circulate in the event, and there were 12,000 people in attendance. And Brad and I heard that a couple of days before, the tickets were going for significantly more than book price. And it reflects the demand. People have been cooped up for nearly 12 months now, Rachel, and they were desperate to socialize, desperate to meet their peers and colleagues, and some of the thought leaders that were in that community and in that event. So it was a tremendous event.
Wonderful. And I'm so glad that both of you got the chance to go, and that hopefully it was also a lot of fun when you were there. So I want to dive into the work that both of you do in this space. So Eckybank and Ekify are sort of part of the same ecosystem, let's say. So can you talk a little bit, both of you, about the work that you do and also how you work together? And we'll start with Brad.
That's a great question. So the work we do together and separately, I mean, it merges at some point because of the relationship Ekybank and Ekify have, and joint ownership at the top. Ekify focuses on the technology, the innovation of bringing DeFi and DeFi products into the lives of regular banking customers. So our goal with Equify is to expand the reach of DeFi to people who currently are not earning any interest on their accounts, maybe earning negative interest, and bring them into the space in a way that doesn't require them to learn so much about technology, not to have to learn about different blockchains, how to set up wallets on them, how to find the best, most reliable products in the DeFi space, and do this in a timely fashion so they benefit from the rates that are being offered. We want to simplify this to a point that it's a simple interface that goes between banking products and DeFi products seamlessly.
Fabulous. And Jason, can you add to that?
Yes, absolutely. I mean, so far what we've seen is some very complex platforms in the DeFi environment, which are great for those that are used to blockchain technology and crypto, but they really are a bit of a stretch for the average retail or corporate user of a bank. So Ekify is a subsidiary of the Ecki Group, and we're really sort of combining the advantages of a centralized banking, licensed banking platform with the advantages of the decentralized DeFi community, which is really growing exponentially by the day. So we're a safe haven for people that want to get into the decentralized finance environment.
So I'm a little bit curious, sort of personally about both of you. What drew you into this world of decentralized finance originally? Maybe Brad, we'll start again with you.
Well, I'm a third generation banker. My family has been in banking and finance as far as I can remember. And I always thought I would go into family business when I was growing up. Then it turned out that technology was my passion and lured me out of the traditional banking and finance world. And I started building companies, software and hardware, and fell in love with it. So continued doing that, got involved with blockchain, and the journey continued to up till I think it was 2015 or 16, where I spoke on stage about the future of finance and banking, some related topic. And one of the people who at that time was working for Jason came up to me and said, "You have to meet Jason Blick." And I said, "Okay, is he here? Who is that?" And he said, "No, he's not here. We were in Hong Kong, but you guys should definitely meet." And he connected us because he thought our visions for how banking and finance should evolve, how DeFi and fintech can enable this were similar or at least compatible. And so we became friends with Jason, started looking into the space and realized that we can solve a couple problems if we put our heads together and built a platform like Equify. And that was the genesis of this project.
Yeah, and Jason, coming from your background, how did you sort of enter into this world of decentralized finance?
Well, I've been growing banks for more than 25 years, and banking itself hasn't really changed, Rachel, for more than 400 years. Much of the technology that we use goes back to the 1970s, and in many respects, it's pre-internet, which is almost inconceivable when you consider any other industry. So in addition to that ability to be disruptive, there are some great numbers, some core numbers that justify moving into this opportunity. At the moment, we have $134 trillion trapped in the banking world, and moving into derivatives and interest rate swaps, which is a product we have. It's more than a $500 trillion industry. So it's an area that's worth disrupting with better technology, with modern technology, and DeFi really is or has a part to play in disrupting those markets and providing a little bit more participation from people that have been reliant on centralized entities for a very long time.
Right, absolutely. So let's get into a little bit more of the specifics here. So Jason, I want to direct this question at you first, but Brad, feel free to add. What are the specific problems that Eckify solves?
Well, if it's convenient, Rachel, let me just share one particular slide which may help us review some of that. So we're trying to solve several different issues concurrently, and they relate to core banking. And we touched on that a second ago. Old technology, inefficient monolithic structures, enormous overheads because of cash handling, branches, etc. And in some respects, obsolete pricing models, etc. So banking as a core entity has long needed a boost, and certainly a technology boost. If you move then into lending and borrowing, it can often be very complicated taking loans from centralized entities and institutions. It can sometimes take weeks or indeed months if you're a corporate. So being able to speed up that with a decentralized platform is incredibly exciting. And then I mentioned at the beginning the size of the interest rate swap market, $500 trillion. And again, that industry, that market hasn't changed for a great deal of time and is subject to a series of, if you will, legacy problems around human error, market risk, counterparty risk. All of these things can be better dealt with in a blockchain environment. And then in DeFi, again, it's a new area, it's a new industry. We're only talking 2 to 3 years, really. And there's a couple of problems with DeFi. It's very inaccessible for most people. A lot of people that have been involved in DeFi or the creation of DeFi platforms are technically savvy, but may not really understand financial services. So we're seeking to solve all 4 of those problems, and hopefully we have. And also we're incredibly innovative in the sense that it's a licensed and regulated bank that's powering all of these platforms, all of these product sets, which gives people a sense of security and accessibility.
That's fabulous. Brad, do you have anything to add to that before I interject here?
Yeah, I mean, just on Jason covered everything on the banking side, of course. On the DeFi side, we're also trying to address the issue of having access to traditional banking. There are a lot of people who generated various amounts of wealth in the DeFi space, and we see that that value is not able to translate into their everyday lives, which is a big problem, because you know, you create this business or in the DeFi space, you create a lot of value for your stakeholders, everyone's happy, and then you want to go buy a car, buy a house, and that's not an option for you, because the wealth you created, the value you created is in the DeFi space. And by addressing both sides of this conversation, we hope to give those people who have been very successful in the space a footprint in digital banking, where they can access the wealth they created and they can use it in their everyday lives.
That's so funny. There's been several tweets I think I've seen over the years that are it's about cryptocurrency millionaires and like the fact that they hardly ever have any money in their bank accounts, that they're sort of cash poor and crypto rich. So that's very interesting that you brought up the specific thing, that the value that's created in this DeFi space is not always transferable into the real world, and that is a big problem for people, especially now that we're seeing so many more people enter into the DeFi space.
Yeah, and we're here to change it.
Yes, amazing. And I also want to kind of ask you about whether this seems like it's sort of turning the narrative about banking and DeFi on its head, sort of coming from maybe the old school way of thinking about cryptocurrencies, that you can be your own bank. You don't need a bank. Banks are problematic and like, we should just get rid of them. But this is sort of a new way of thinking about it, that we have DeFi and we have banking, and those two things can coexist and actually can help each other.
That's absolutely right, Rachel. I think it's somewhat naive to presume that crypto is going to grow without institutional monies, without markets monies, etc. And the numbers speak for themselves. You're talking about less than $2 trillion in terms of market cap for crypto, and you're talking $134 trillion for banking. So there's the ability, obviously, for us to be that bridge, the genuine bridge between decentralized finance and centralized finance, by being a licensed and regulated bank, but also a huge and very exciting technology platform. So for the first time, we're genuinely bridging those two marketplace places.
Yes. Okay. So we talked about sort of the problems, the backdrops, the things that you were addressing. Now let's talk concretely about the actual services that you provide. What are the concrete things that you're doing in this space?
So it's a very interesting sector at the moment. Many people, indeed people at WeBank, aren't altogether happy with the interest rates that are available from institutions such as banks across the world. We are lucky as a marketplace to provide more than 2% per year in dollars, and many clients have negative interest rates for euros. And a lot of this is driven obviously by central banks, monetary authorities, and their underlying fiscal policies. And people around the world are saying, well, we understand the politics of it, but why, how can I not get more for my money? In DeFi, obviously, people are lending and borrowing and investing, and they're getting significant returns on their investment that can often exceed those of fixed term deposits. So what we have done is we've created 4 products: a fixed term lending product so people can borrow and lend, a variable rate product, often known as a money market product, so you can get your money in out really quickly. As I mentioned, we are the first institution that's gone into interest rate swaps, and that enables you to refinance. Perhaps you've got a money market product, but you want it to be a fixed term, fixed rate product. So for example, you're borrowing today at 12 or 13%, but you want to convert that into something that's 6 or 7%, or the other way round. And then we have a yield aggregator, which is a nice way of making an investment decision and really farming that out across a series of platforms to almost replicate a fund of fund model. So in combination, we have the greatest number of DeFi products on any platform, and we have one that's very synced up with an existing and regulated bank. So you've got a real on and off ramp for all of these product sets.
Fabulous. And Brad, do you have anything to add to that?
No, Jason summarized our DeFi products very well and in detail. In addition to that, of course, with our partnership with Eckybank and being powered by it, we also are able to provide all the traditional banking services and products that people may be looking for.
Right, right. And yes, Jason is on top of it. So I want to ask you, who are the target users and clients of each of these products?
Well, the bank itself, Ekibank, is predominantly focused on the needs of corporates and businesses across the world. Of course, we provide individual accounts as well, but we were one of the first digital banks to focus on the needs of businesses in 180 countries around the world. In DeFi at the moment, what we have is an incredibly capable, largely technology-driven client base, individuals more than anything else. But what we want to do is encourage funds, family offices, capital markets and public monies to really consider DeFi as a legitimate investment target. And that really gives us the opportunity to expand DeFi from its current numbers of approximately 1.3 billion market cap into a more significant capitalization of 10, 20, 30, 40 trillion, which is really necessary if you're going to scale. And the only way to do that is by tackling public monies, capital markets monies, family offices, hedge funds, etc. That isn't to say that we're not taking care of the individuals, which we are, but by injecting all of that institutional money, you've got better liquidity, you've got better rates, and you've got incredibly competitive product sets.
Right. And I'm curious, just over the last 18 months, as we've seen this huge explosion in the DeFi space, what have you seen in terms of corporate interest, in terms of public money interest? Do you have more of those kinds of entities approaching you?
We're dealing with a vast number of corporate entities and financial institutions who are now considering us for treasury management. Because at the moment, many of these organizations are parking money in fixed term products that may be giving 1%, 2%, 3% per year. And they're seeing these platforms in DeFi providing 7 to 14%. Their concern, however, is that a lot of these platforms are not licensed. They may be created or managed by people that don't have a great deal of financial services experience. So before they invest and place their monies in a DeFi product, they need to feel very comfortable with who they're dealing with. And obviously Equify, being powered by a licensed and regulated bank is giving them that sense of security.
Right, right. I see. And can you talk a little bit? I'm just curious, to get an inside look at what those conversations look like with institutions who are interested in DeFi. Like, is it the type of thing where it's like, okay, well, if more of these platforms were regulated, then it's a definite yes from us that we would be involved, or what is that like?
They are definitely taking it very seriously. Our personal opinion, and it's somewhat radical, is that if financial institutions, if indeed banks, don't consider DeFi as a very viable option, then they could become obsolete. People are now more in charge of their money, especially globally. They don't want to deal with 5 or 10 different banks in different countries. They want one bank that covers their global needs, like Eckybank, but they also want to be able to manage and control their monies and make lending and borrowing decisions as individuals, which really provides enormous benefits to them, but also the banks themselves. Obviously, DeFi is about borrowing and lending peer-to-peer. And that means that the capital adequacy ratios, the balance sheet risk, and the stress test risks are removed from the central entity, providing banks with a really attractive opportunity to modernize their existing footprint and risk profiles.
Right. So I want to back up for a moment and just to clarify the relationship between Equify and Eckerbank. So how do these two, we've kind of talked around it, but I just want to ask you both specifically, how do these two entities work separately and together, and how is that relationship structured?
I'll deal with the corporate and then Brad will deal with the technology.
Okay.
Ekibank is owned by a single holding company, and that holding company is the majority owner of the Ekify company. So it's a very closely knit group and very, very committed to providing both centralized and decentralized finance products, but within one very controlled, very managed, and very safe ecosystem.
I see. And then, yeah, Brad.
And from a technology perspective, we want to have the most seamless experience between the two. So we are developing and building towards a future where both the bank services and DeFi services are going to be available through a single sign-in platform, and things like fiat onboarding, offboarding, or OTC transfers, or any access to DeFi products is going to be as simple as moving money between your checking accounts. So that's the future we're building right now. The platform, the protocol is almost done. We're looking to hopefully have a launch date soon, and we're very excited to see the demand for it.
Yeah, absolutely. And I also want to ask about the process of becoming a fully licensed and regulated digital bank, and whether or not your sort of ties to the DeFi world, to the cryptocurrency world, influenced that process, and if they did, how so?
Well, in our jurisdiction, there are several hundred applications for a banking license every single year. And usually one out of all of them will be approved. Getting a charter as a bank is obviously extremely difficult, as it should be. So this is my second bank. This particular one we established in 2015. And as I say, we very much broke the mold, because from the very beginning, we were focused on the needs of clients in 180 countries around the world. And that really differs from most digital banks, who are usually focused on one or two national environments. But the process of launching a bank is extremely difficult, as it should be. It takes usually several years and an enormous amount of money. And the ongoing compliance obligations, the ongoing regulatory obligations mean that you have a very mature entity, a very safe entity, and a very secure entity, giving clients enormous protection and a sense of great safety.
The advantage we had, Rachel, was that Jason had already worked really hard and had already secured all the licensing and had very good relationships with our regulators. So when the conversation around DeFi products started, we had a very large head start over anyone else in the industry, because a lot of the times in crypto, people build something, they launch it, and then they realize, oh, we actually need to be licensed and regulated to be able to do this. And then they scramble to try to find a jurisdiction that's going to welcome them and accommodate them. And oftentimes they don't, because they've done so much without any conversation with any regulator as is, and they're trying to play catch up. We did the exact opposite, and the result was a very well received project and solid, setup from a regulatory perspective.
That's wonderful. And I want to ask also, as you went through the process of getting regulated, building this company, building all the services, were there any particular moments of challenge or, friction that you can speak to for other people who or other companies that might be interested in building in this particular space, but who may not have the same kind of regulatory experience that you have?
Certainly. The space itself obviously is going through enormous change, and we will see a raft of new legislation this year in the DeFi sector to add maturity and to ensure its protection for users. And that really relates to KYC, AML, and compliance more broadly. So before anybody considers moving into this space, pause, look at compliance, look at KYC, look at risks associated with AML, and then progress with a review of your underlying products and client base. Because without having a solid regulatory footprint, it's highly unlikely that there will be a sustainable business model. What's interesting about Ekibank and Ekify is we are now getting a series of other banks that are coming to us saying, hey, can you assist us in developing something very similar for their client base, for their institutional coverage? So banks are taking this seriously. They're already regulated, they're already licensed. So it's not just the DeFi community that wants to move into this space. There are some leading banks that are seeking our assistance as well.
Okay, wonderful. And Brad, can you speak about that from a technological standpoint? Have there been any technical challenges with regards to regulation? Has the regulation influenced the way that you've been building this platform?
The regulation definitely influences and guides us through the process of deciding, architecting any regulated platform. My team and I have built several fintech projects in the past. We've built exchanges, we've built trading platforms. So we are no strangers to building ecosystems from a technological perspective that are both compliant and extremely robust, because whenever a piece of software or hardware is dealing with value transfers, there are opportunists out there who are looking to disrupt it to their benefit. So the challenges we see are less regulatory, because we work hand in hand with our regulators. We understand the expectations and the standards that we need to build up to. And then the challenge is always, how do we build something that's not going to invite any unwanted attention, no hackers, no exploits, especially considering, when you're building a DeFi platform, there are numerous smart contracts involved. There are APIs and oracles you need to use for certain functionalities. We want to be building something and double, triple checking what we build before launch. And that's exactly what we're doing. All our smart contracts are being audited twice by two separate, very well-known auditors. Obviously, I don't want to give out the secret sauce, but we're building things in a way that makes it the least attractive to try to attack or hack. And that way, we want to create a bank grade DeFi protocol and platform that people can feel comfortable in.
Right. Yeah, exactly. So I want to step back once again and sort of look at the big picture of DeFi as a whole, where do both of you see Ekibank and Ekify sort of sitting in this landscape? What is the sort of systemic role of these two companies and the work that they do together?
Well, in some respects, it's about liberating individuals' choice and liberating money as well.
Mm.
No question that we're going to continue to need centralized banks, and Ekibank really is at the forefront of that. But people are looking for alternatives. They enjoy the returns that can be provided by lending and borrowing directly amongst themselves. But to do so, it is important for it to sit within a regulated environment. And again, even if you are lending or borrowing, investing amongst peers, you still need to be able to get your money in to the real world to buy your Starbucks or to pay for your mortgage, etc. So unquestionably, we're going to see centralized finance and decentralized finance sitting together in order to gain scale. That's the advantage for the individual, but it's also the advantage for banks. You can de-risk, and if you can de-risk off your balance sheet, you protect your underlying customers because you don't necessarily face the risk that we saw in 2008 and beyond. So clever institutions, clever banks, and clever regulators are going to hopefully support this initiative and grow it over the coming years and decades.
And Brad, do you have something to add to that?
Yeah, we see our position as the gateway to that leads everyone into the DeFi space and crypto. We want to partner up with as many projects, as many blockchains as possible. We want to partner up with institutional partners, clients, and really be the highway into the crypto world, into the DeFi world for those who so far have found it either too risky or too technologically complex to actually try it out. And we believe if we can be good bastions of that transition, we can truly contribute to an increased market cap, increased crypto market cap, as opposed to just cannibalizing market share from other projects.
Mm-hmm, mm-hmm. And I also want to ask, just for your opinion, both of you, on sort of the DeFi market, the DeFi ecosystem, rather, as a whole at this current moment. How do you see DeFi transforming? What are the most powerful forces that you think are at play, both financially and technologically right now? And what are you the most excited about?
From a pure banking perspective, there are, as I mentioned, incredible benefits for financial institutions and banks by moving certain risk off the balance sheet. And by removing it off the balance sheet, you're empowering individuals. And by empowering them through a DeFi platform, you can give them much better rates than perhaps most central institutions can. That's great for individuals, it's great for businesses, but it does also, as I mentioned, mean that institutional investors, funds, capital markets can really look at an alternative to centralized entities, but they will only do so if it's mature, if it's regulated, and it's appropriately compliant.
And Brad, what about you?
I'm most excited about to carry on with what Jason was saying about the maturity of the market. So DeFi started in 2017 with Synthetics and Bancor and very few projects that a lot of people didn't truly understand and saw as evolutionary for banking and finance. Fast forward 4 years, there are hundreds and hundreds of DeFi protocols, platforms, products launching. And unfortunately, a majority of them are anonymous. So you had mentioned something like everyone becoming their own bank and decentralization being opposed to, opposite of and opposed to any central authority. That's not really conducive to a smooth transition from what we have today to a fully decentralized future for banking and finance. And where I get very excited is the interim steps that that needs to happen for us to get to the future we want. And that involves all of the existing institutional banking and financial entities evolving with the space. It includes all of the DeFi products and protocols evolving and converging at a point where we benefit from the experiences and the best of both worlds, basically, because you can't just ignore what has had happened for hundreds of years and then say, well, this is the future that's going to happen. There has to be some transition. It could be a one-step transition. It could be a three-step transition. And with Equify, that's exactly what we're trying to do. We're trying to evolve both sides of that ecosystem and bring it together in a way where technology plays a big role in what we do, both on the banking side and DeFi side. Decentralization and access plays a big role. You know, to a certain extent, if you look at a digital bank like Eckybank that has 180 correspondent relationships in 180 countries, and you look at Ekify and the product suite we have, it's not exclusive. We're not trying to exclude anyone, whether it's traditional finance entities, institutional entities, or power DeFi users, DeFi entrepreneurs. By bringing the two together, we believe we can take the next step towards more technology-driven, a slightly more decentralized future. And if we take enough of these steps, we're gonna get to the future we actually want to have without alienating anyone and without really disrupting anything in a way that it's broken.
I love what you said about context, you know, and Jason, this is something that you also touched on earlier, that the financial world isn't just going to stop and then like the DeFi world is just going to pick up. It's like we have this 400-year history of this financial system that has been operating. And it's like if DeFi wants to grow and work, you have to acknowledge that context and kind of come back and build a bridge, as you said, between the past and the future, the way we've been doing things and the way we want to do things.
Absolutely, Rachel, because ultimately, if something goes wrong, a client, an investor, a deposit holder needs to be able to go to someone. They want to be able to escalate an issue or a problem. And in many instances, current DeFi protocols don't provide that level of transparency and accessibility. So obviously our structure is a little bit different. We're extremely transparent, we're extremely compliant, and people get that sense of security. Equify, as a result of that, has been voted a top 5 DeFi company more than 8 times, and Ekibank has been voted a top 10 digital bank because of those core transparency approaches.
Yes, yeah, and congratulations on being so highly ranked. That's quite an accomplishment. So I want to ask you both, for people who've been watching this or listening to this discussion, watching this webinar, what do you hope that they walk away with today or whenever in the future they're watching this recording?
Well, we hope there's going to be, from the banking side, we hope there's going to be an awareness that banks and DeFi can live together, can be a very cohesive partnership. And hopefully people are going to see this as a way to scale. Scale by the injection of public and institutional monies into DeFi is good for everybody. And hopefully they will see Ekibank and Ekify as a real pioneer in this area, and in some instances replicate that, or in some instances look to us for guidance and leadership in the deployment of whatever they're trying to achieve.
And Brad, what about you?
I'm just gonna echo what Jason said, because he said it so eloquently. But we truly hope that people see traditional systems can be evolved into the future we want, and Equify is gonna be the proof of that. So I hope that they follow us, they partner up with us where it's possible, and take this journey together. Because if we can bring people, bring entities on the DeFi side and on the banking side together through our partnerships and through our platform, we've already created the framework for it to happen. And just like Jason said, if they can use our framework, great. If they want to build their own, here's a template. This is what we're doing, and let's do more of it. And if we can partner and speed this process up, everyone wins.
Absolutely. So where can our audience members find out more about Eckybank and Equify? Eckify. I went the whole time without saying Equify until now. Eckify.
People that are interested on the bank side can visit us at www.ekibank.com, and Brad can explain a little bit more about how to connect with us on Equify.
On the Equify side, obviously our website is up. It's www.EQIFI.com, so Equify.com. You can subscribe to our newsletter. You can get whitelisted to start using the platform whenever it launches. That puts us in direct contact with you. We keep you updated. And then we have a vibrant Telegram channel that's filled with emojis and a lot of friendly conversations. So reach us out on Telegram. You can follow us on most social media platforms as well. It's always going to have Ekify in it. So search for us, and if you have any difficulties, you can always reach us on the website.
Wonderful. Jason and Brad, thank you both for this very dynamic discussion. Such a pleasure to speak with both of you.
Thank you,
Thank
Rachel.
you for having us.
Yes, absolutely. And to our audience members, that's all for today. We hope you enjoyed today's discussion, and don't forget to share on social media that you were here. Take care, everybody, and best of luck.